Welcome to unit number 14, which looks at control accounts. Now, to control something is to manage something. So, control accounts, they help us in the internal checks on two major accounts. There is number one, receivables account, and there is number two, payables accounts. Receivables are also known as sales accounts, sales control accounts. Payables are also known as purchases control account. So let's start off in this topic. We are going to look at the following four items. Number one, what are internal checks? What are internal controls in place? Remember, we are looking at control accounts. Number two, how do we prepare control accounts? There are two types of control accounts. There is what we call receivables control account or payables control account. Receivables is also called debtors control account or sales control accounts. Payables is also called purchase control account or creditors control account. So let's start off by looking at what is internal check. Internal checks sometimes are known as internal controls. Every organization must put in place internal controls. Now, why do we have internal control? There are three reasons. Transactions to be recorded and processed have been authorized. So to ensure that every transaction to be processed has been authorized. Number two, that they are all included, that you have accounted for all transactions. So all transactions have been accounted for, that they are correctly recorded and accurately processed to avoid some fraud and some errors that they may be there. So internal checks or internal controls are to ensure transactions are recorded and processed and have been authorized and that they are all included and they are accurate. What are the different types of internal controls or internal checks that we have? Number one, a trial balance. A trial balance helps to check the arithmetic accuracy of all our ledgers. But it does not correct all mistakes. It may still balance if there are some errors which were made. So a trial balance is a type of internal check. Number two, bank reconciliation. Bank reconciliation helps us to reconcile the amount in the cash book and the amount in the bank statement. So it's a control account. Number three, control account reconciliation. This is our topic of study today. Number four, segregation of duties. Separation of different roles. For example, the person signing the checks should not be the person making the payments. That is segregation of duties in order to avoid fraud. And another control that can be there is authorization. Every payment to be made must be authorized by a person who is not the one making the payment. So those are the different types of internal control measures that we can have. Control accounts. In our introduction, we have said there are two types of control accounts. Number one, receivables control account, and number two, payables control account. Receivables control account is also called sales control account or debtors control accounts. Payables control account is also called purchases control account or creditors control accounts. But the point is this: it helps us to account for the totals of records of customers. So a receivables control account is an account in which records are kept of transactions involving all receivables in total. A summary of all receivables in total. The other one is a summary of all payables in total. Format. Now, in our receivables, this is format for receivables. Take note that on the debit side, you have opening balance. But sometimes the customer can pay you more in excess of what they were supposed to be paying you. It may result in the balance being on the credit side. So what I've highlighted is in very unique circumstances. Ideally, all balances should be on the debit side. But if the customer pays you more than what you are claiming, it may result into the balance, opening balance being on the credit or closing balance being on the debit side. Now, opening balance, credit sales. We are dealing with credit sales, not cash sales. So note that in a receivables control account, we only deal with credit sales. Cash sales goes to, cash sales is not posted in the receivables control account. We only deal with credit sales. Now, if the customer refunds us, refunds to customers, if we refund the customer some money, remember customers pay us. If we refund them, we post the refund on the debit side. If there is any check we received from the customer and it has been dishonored, in that case, we debit it. And if there is any bad debts recovered, there is cash that you have gotten, you debit it. Next, on the credit side, cash, when you receive cash, you now reduce whatever you was expecting. Bills of exchange, return inwards, bad debts. Remember this side it's bad debts recovered, but this side it's bad debts. Discount allowed, other allowances, and contra. A contra is an entry that affects both the receivables and payables. The opposite of that is true for a payables. So in a payables, opening balance is this side. It can only be this side if we overpaid suppliers. So opening balance, credit purchases, cash bank, refund by suppliers. So if suppliers refund you, the refund is a credit entry, and then these are just the opposite of all those credit entries in the receivables. They are now on the debit side of the payables. So that is cash paid, bills of exchange, discounts received, other allowances, return outwards, and contra. A contra is an entry that affects both the receivables and payables. So in that format we have looked at, let's look at an example. And we want to prepare two sets of accounts. There is an account, the first account, we want to prepare two sets of accounts. The first account, I'll call it receivables control account, and the second account, I'll call it payables control account. So there are two accounts we are preparing, receivables and payables control account. So every transaction that we read, we'll be posting it in these accounts. So from the following, prepare a sales ledger and a purchase ledger control account. Sales is the same as receivables. Purchase is the same as payables. So opening debtors balance. So opening balance in a receivables, so we'll call it balance brought down is 44,000. 44,000. The next one is opening creditors. So balance brought down for the creditors, it's 24,900. So I've accounted for the first two transactions. Now you are being told sales, purchases, sales return, purchase return, checks in, checks out, bad debts, contras, discount received, discount, customers check dishonored, bills of exchange accepted. Okay, I was just for you. So here we will come and post sales based on the assumption that all the sales are in credit. So 143,766. 143,766. Next is purchases. So purchases based on assumption they are all in credit. Purchases is 87 87,982. So that is the assumption, 87,982. Next, sales return. It reduces these. So there is sales return. Sales return. Sales return is 2890. 2890. Next, purchase returns, 742. Purchase return, 742. Next, checks in. These are checks received. So that is cash received, of course, through checks. Checks in 140,809. Next, checks out. These are checks paid out. So checks out. So cash paid through check, of course. Checks out is 80,234. Next, bad debts. So bad debts here, bad debts. Remember, if it's recovered, it's that side. Bad debts. So our bad debts are 2890. 2890. We continue. Next, contra. Contra is an entry that affects the two sets of account. Okay, my space is contra affects the two sets of account. A contra is an entry that affects all the accounts. 874. 874. 874. Next, discount received and discount allowed. When do we receive a discount? If we were to make payment. When do we allow discounts? When we are to. So discount received. Discount received. And this other side, we need to have discount allowed. Okay? So discount received is 540. Discount allowed is 1034. Okay? Next, customer check dishonored. So dishonored checks comes here. Dishonored checks of the customer. Dishonored check is 500. And this other one, bills of exchange accepted by the, oh, I've run out of space there. Bills of exchange accepted by the customer. Accepted by the, bills of exchange accepted by the customer. So bills of exchange is 700. So we get the total, and I can bring these. I can also get the total this side. So our totals here on the receivables is 44,000 plus 143,766 plus 500. So it gives us 188,266. 188,260. And then you remove 2890 minus 14809 minus 2890 again. Were there two 2890? Yes, there were two 2890 minus 874 minus 1034 minus 700. So it gives us there is a small 188,266 minus 2890 minus 14809 minus 2890 minus 874 minus 1034 minus 700. So we get a balance of 39,069. So that's our balance carried down. 39,069. We come and repeat the same process for payables control account. So payables will have 24,900 plus 87,982. So it gives us 112,882. And this other side gives us 112,882. So we get the difference now. The difference is 112,882. We minus the first 742 minus 8234 minus 874 minus 540. It gives us 3492. So this is our closing balance. We'll call it a balance carried. That is basically how we account for control accounts. But let's see other points. So that's the two sets of control accounts that we need to have. The two sets of control accounts that we need to have. Now, why should we have a control account? Number one, to check the accuracy of entries made in the personal ledgers, personal accounts. And the two ledgers are the sales ledger, purchase ledger, and then also to check entries in cash book, because we'll also be showing the cash that has been received and paid. Number two, to assist in location of errors, to find out if there is any error or mistake that was made. Number three, it's a form of internal check where there is separation of bookkeeping what? Where there is segregation of duties, it's a form of internal control. And number four, a balance can be extracted quickly for producing a trial balance. So extracts of the totals of these control accounts can be used, the balance carried downs can be used to extract a trial balance. Next, control accounts reconciliation. We must be in a position to reconcile the control accounts. And we have already seen how we do the reconciliation of control accounts in the previous example. So the balance on the control account may not agree with the sum of individual receivables or payables balances extracted from the receivables or payables ledger. So sometimes the balances from the receivables and payables ledger may not agree with the balances on the control account. Therefore, we need to reconcile and find out what caused the difference. So the control account should be balanced regularly, and the balance on the account agreed with the sums in the individual ledgers. Regular reconciliation enables errors to be picked early and quickly and to guard against errors and fraud. Why control accounts and individual receivables or payables balances may not agree. Sometimes the total in the receivables account, receivables ledger and payables ledger may not be the same as the total in the receivables control accounts and payables control accounts. What are the reasons? Number one, there can be an incorrect amount may be posted to the control account because of a miscast of the total in the books of prime entry. Number two, a transposition. We had already looked at errors, transposition error. A transposition errors may occur in posting an individual balance. For example, we were supposed to be recording 250, but we recorded 520. That's a transposition error. Number three, a transaction may be recorded in the control account and not in the memorandum ledger. So we have recorded in the control accounts, but not in the receivables ledger. This requires an entry in the ledger. And number 4, the sum of balances extracted from the ledgers, that is the receivables ledger or payables ledger, may be incorrectly extracted or miscast. Maybe the figure you had put in the ledger account, the personal account, was misstated. This would involve simply correcting the totals of the balances. Now, period end routines. What are the routines we need to do? Some routines that we need to do are, at the end of a given period, balancing the ledger accounts. Always ensure your accounting team balances the ledger accounts. Now, the second duty we need to conduct on a routine basis is bank reconciliation. Number 3, control account reconciliation for receivables and payables. Number 4, extracting the trial balance from the balance ledger accounts. So you must always prepare the trial balance from the ledger accounts. Once all these controls or all these routines have been done, once all the period end activities have been completed, the accountant of a business is in a position to prepare the financial statements. Now, in this syllabus, which financial statements? Statement of profit or loss and statement of financial position. We have also stressed when we started the importance of segregation of duties. Duties, normally we separate duties. So there will be a need of separation of duties as a security measure, as well as to meet the demands of workload. So there are two main reasons of segregation of duties. Number 1, to reduce workload of an individual. And number 2, as a security measure to ensure not one person does everything. There can be fraud if one person does everything. So a typical account department would have the following. This is just a proposal. Number A, a receivables ledger controller. These we are talking of big companies, not small individual companies. A receivables ledger controllers, a credit controller, a payables ledger controller, an assistant accountant, a payroll controller, and an accountant who oversees the entire process. That is how we account for control accounts. But to enable us wind up on control accounts, let's look at some 6 questions. Past paper questions, 6 past paper questions. Number 1, a credit controller wishing to decide which debts needs to be chased up would refer to which of the following? Aged accounts. Aged accounts. So a credit controller wishing to decide which debts. So receivables age analysis. Do you have receivables age analysis B? So you'll need to look at age analysis to know which amount to follow up and which amount not to follow up. Question number 2. The following entries appears in the receivables ledger control account for June. Balance on 1st June is 7,500,000. Sales is 20 million. Receipts from customers is 8 million. Irrecoverable debts is 900,000. What is the closing balance? So this tells us it's a receivables control account. So the opening balance brought down. The opening balance is 7,500,000. 7,500,000. The sales that we made was 20 million. So we made sales of 20 million. Receipts from the customers. Cash received was 8 million. Cash received was 8 million. Irrecoverable debts. Irrecoverable debts written off was 900,000. So you are being asked, what is the balance on the last day? What is the balance on the last day? This is 27,500,000. 27,500,000 500,000, and then you minus that. So 27,500,000 minus 8 million minus 900,000. It gives you 18,600,000 as our balance carried down. 18,600,000. So our correct answer is D. D is our correct answer. Next question. There were 6 questions. Next question. The following entries appeared in the payables. The other one was receivables. The following entries appeared in the payables ledger control account for February. Balance, opening balance is 1,700,000. Purchases was 18. Paid to suppliers was 10 million. Discount received is 1.2 million. Purchase return is 3 million. What is the closing balance? So here the entries are opposite of the other one because it is a payables control account. So in a payables control account, opening balance is a credit. Balance brought down is a credit, and it's a credit of 1,700,000. Next, purchases. Purchases are 18 million. Purchases are 18 million. What has been paid? Cash paid. What has been paid to suppliers is 10 million. 10 million. Discount received is 1.2. Discount received is 1.2 million. Okay? Purchase returns. Purchase returns is 3. Is it how much? 3 million. Purchase returns is 3 million. And then you are now being asked, what is the closing balance? This is 19,700,000. 19,700,000. And then you minus 10 million. So 19,700 minus 10 minus 3. So it gives you 5,500,000. 5,500,000. It's our balance carried down. So do we have 5,500,000? Yes. The correct answer is A. The correct answer is A. Question number 4. Next question. Question number 4. A business maintains a receivables ledger account. A debt of 1.5 million is to be written off. So there is a write-off of 1.5. Correct. Ignore VAT. So remember, the debt will reduce the receivables. So debt to be written off will reduce the receivables. So the irrecoverable debt will be an expense and the receivables will be reduced. Remember, receivables is an asset. When there is a reduction on asset, we credit the asset. We credit the receivables and we debit the expense. Expense is irrecoverable account. So debit personal account of the customer and credit irrecoverable. Irrecoverable is correct, but personal, sorry, it's the other way, the opposite. So irrecoverable is an expense, should be debited, and these should be credited. Number B, irrecoverable debt expense, that's correct, and receivables credit, that's correct. So the correct answer is B. Question number 5, a document sent to a customer at the end of the month to show transactions that have occurred and the amount owed. A document sent to a customer at the end of each month, it's called a statement of accounts. So a document sent to a customer at the end of the month to show transactions that have occurred and the amount owed is known as statement of account. The last question. The last question is, which of the following act as an internal check or control in maintenance of accurate accounting records? Number one, trial balance is a control. It's an internal check. Bank reconciliation, we had already looked at these. Control, account reconciliation, and segregation, all of them. The correct answer is D. And that brings us to the end of the unit. The end of the unit, control accounts. We'll now next look at the next unit will be preparation of payrolls. That will be the last unit in our next session, preparation of payrolls. It will be unit number 15. Thank you, and let's meet in the next unit.